Welcome everyone to this Featured Voices podcast. I am your host, Chris Martenson, and it is, April 9th, 2020. Now, I have been very tirelessly reporting on the whole coronavirus crisis, but I've been bringing you the scientific background. I've been doing a little bit about the treatments, but I've always had the economy in mind, because as you know, if you've been following me for a decade, I've been really harping on the economy, specifically the bubble economy, specifically what the Federal Reserve has been doing, I think, in my opinion, has been heavily bastardizing the markets and turning them into sort of Franken markets. And now we have really a world-class shock, the coronavirus, coming smashing headlong into what really, in my estimation, was a bubble economy. It was driven by debt, it was driven by credit, it was driven by financialization. And because of that, we had weak underpinnings for this particular economy. Look how many millions of people, over 10 million so far, have lost their jobs just running into a few weeks of trouble here. What's the response been? Well, we have these stimulus packages that are flowing incredibly slowly to actual citizens, light speed to the top players in the markets. It's a very top-down economy, and that shows, personal opinion, I don't think that's going to work out so well. So I'm super excited to have today's guest on to help us begin to unpack this, both from what's really happening, the mechanisms, and the fairness of it all, or unfairness, depending on how we want to look at that. So today's guest, super excited to have him on, Matt Taibbi. Matt, let's see here. I got so much on him. He vaulted. Oh yeah. Matt, you vaulted to the very front of my awareness 2010 article. It was about the bubble economy, where you said, you were describing Goldman Sachs. Quote, you wrote, "The world's most powerful investment bank is a great vampire squid wrapped around the face of humanity, relentlessly jamming its blood funnel into anything that smells like money." End quote. Love that. Love that. Matt is, Taibbi, primarily known for his work at Rolling Stone magazine. He's reported on politics, media, finance, really great stuff on finance and sports, winning the National Magazine Award for Commentary in 2008. Numerous books. We got Clown President, Dispatches from the 2016 Circus. I bet you've got some good things to say about the 2020 Circus. Can't wait to hear. New York Times bestsellers, The Divide, American Injustice in the Age of the Wealth Gap, 2014. As you all know, I'm a critic. I think the Federal Reserve created that wealth gap on purpose. And then Griftopia, Bubble Machines, Vampire Squids, and the Long Con that is breaking America. Maybe that just broke. That's what we're going to talk about here. Hey, very interesting. I found out in doing this, I did not know this, Matt, that you worked and lived in the former Soviet Union for a decade and edited an English language newspaper in Moscow called The Exile. Also played professional basketball in Mongolia. Now,
I did.
That's a resume builder.
I was known as the Mongolian Rodman, actually.
That's great. So let's start on the human side. How are you doing with this, with the quarantine, and what's going on for you personally here?
Yeah, it's all good. Thank you, Chris, for having me on. I think like everybody, it's getting used to being home this often. But I'm here with my three kids and my wife, and very, very happy to be spending more time with them. Actually, I think, a lot of us are going to find that the crisis is teaching us that a lot of aspects of modern life probably were counterproductive, and we're learning a lot of things about how better ways to live. So I'm choosing to look at it that way.
Great. I am too. I actually think a lot of good could come from this, but I think first we have to go through a little bit more darkness. And I'm now speaking about the so-called stimulus bills that are emanating, or should I say wafting odorously from Washington, D.C.
Right.
From my perspective, Matt, what I'm seeing is what I kind of alluded to in the intro is that these are trillions of dollars that are now really flowing to the top instantly, like instant. I've got a lot of specific examples around that we can talk through, but really a lot more slowly to the people, who actually need it, and the small businesses. Am I just taking too jaded of a view, or does this really look like America is going to try all the wrong things before getting down to the right things here?
No, I think you've got it right. I mean, the one thing that's different about this rescue package as opposed to 2008, well, there's two things. The first is that we're not directly bailing out the people who are responsible for the crisis this time, although you could sort of argue that too, but it's not as egregious on that front. The second is that there is actually a Main Street component to this bailout, but the problem is, as you've identified, there are so many steps involved between ordinary people and that money, And as they're finding out, and I don't think it's surprising, there are intentional reasons for this and also accidental reasons. It's just very, very difficult logistically to try to get all that money out to real people, and they didn't think it through very well. They decided to administer this through the Small Business Administration, which is totally overwhelmed. It doesn't have enough employees to put out that much money. But on the flip side, the much larger part of this rescue, the multi-trillion-dollar aspect of it is a rescue of the financial markets, which is going to be more or less instantaneous. And there's basically no friction there whatsoever. And even before the CARES Act was passed, they had already started buying $75 billion a day in mortgages and treasuries from the Fed. So these programs are enormous in scope. They're instantaneous. There's almost no oversight of any of them, and they're going to end up contracting the very people who are going to benefit from these programs to administer them, which is also crazy.
Yeah, I said I get into some of the details. Let's jump right there. So I was watching mortgage-backed securities because the Fed was allowed to buy treasuries and MBS paper, and instantly, of course, that's one of the things that's going to get whacked. And they were just getting smoked there in the first few days, as they should, right? People aren't paying their mortgages. We just found out yesterday that 25% of all mortgage payments didn't happen. I mean, it's like, this is a huge shock.
Sure.
So what should happen is that mortgage paper should be selling for less and less. The Fed steps in, says we're going to buy it. They're now buying it as of this morning at 103 cents on the dollar, over par. So whoever's holding that paper is selling it at a profit, no loss. Whereas if I take any losses as a trader, that's kind of my own tough luck,
Of course. Yeah, exactly. And this is the same principle that governed a lot of the 2008 bailout, except it's just the scope of it is just so much bigger this time. Again, it's one of the things that I talk to people on the Hill about their feelings towards this bailout, this rescue package, is there's this presumption that sort of propping up prices in the financial markets is an end in itself that's absolutely necessary, and nobody's ever actually had to cross the Rubicon of explaining why that's actually true. And it was just sort of accepted from the start of this whole process that we just have to make sure that all of these different markets stay at a certain level, and that's a presumption that everybody carries. And I think part of it is because a lot of the members of Congress, as you probably know, they just don't know a whole lot about this world. They're not really understanding what it is that they're approving. So as a result, you get a lot of people who are going to end up making a lot of risk-free money, and they're going to argue that that's a systemically necessary goal, and it's going to be up to everybody else to prove them wrong.
No, I could have imagined something different. You say it's complex how to get money to everybody, but looking through it, right? And again, I think we have 400 plus lawyers out of 535 on the Hill. So everything's needlessly complex. Maybe it's Joseph Tainter's complexity works against you kind of a moment here. But what I'm seeing is, it's means tested. If you're earning 75,000, begins to adjust out. Do you have a kid? Do you not have a kid? When did you file? There's all this stuff. Whereas what Canada said was, hey, you're out of work. Here's $2,000 Canadian, boom. And we're going to keep that up until it goes. And they don't care, because they didn't have that complexity of having to figure out, did you file? When did you file? Do we have you on our electronic funds transfer? Wait, we have to send you a paper check. What's your address? Instead of doing all that, Canada just said, here's your money. That feels like, to me, that would have been the more honest, genuine way to actually get money out where it was needed most first.
Yeah, I think you're right. I think there were lots of ways they could have done that were much simpler than what they decided to do. I mean, I heard one person on one of the committees say we could have just done this through the IRS. I mean, they have all the information. Could have basically instantaneously distributed money both to individuals and companies of a certain size. It all could have been a lot easier. Instead, they created all these bottlenecks. And as you point out, they're all lawyers, right? So they have to have something in the bill that kind of speaks to whatever little concern they have. And as a result, some of the banks, I think, are quite rationally saying, we don't really understand what our mandate is here. What are we being asked to do? What are we going to be held liable for later? That actually is confusing. I mean, I'm normally kind of anti-bank in my orientation on this reporting, but I do see their point of view. And then there's also the additional problem of they're going to just hold up the process because they want better conditions and they want to make more money. And there's no, because we're depending on companies like Wells Fargo and whoever else to put this money out there, and JP Morgan Chase, they don't have a whole lot of incentive to execute the program quickly either. So It's just needlessly complicated. They just added too many things that are hard to worry about at the same time.
Well, the banks got bailed out pretty generously and handsomely, and I feel like they kind of owe us one on this. And they started dragging their feet, and they said, "We don't like the 0.5%. We'd rather have 1%." And that still didn't like get the gears turning. Wells Fargo's like, "Well, we can't figure out how to make this work magically." And then all of a sudden, so what did the SBA do? It was just announced today. The SBA will pay lenders fees for processing these PPP loans up in the following amounts: 5% for loans of not more than 350,000, 3% of loans between 350 and 2 million, and 1% of loans over 2 million. Guaranteed money. They are making sweet bank just for making a loan, which is backstopped by the taxpayer, I guess.
100%. Yeah, it's 100%. So there's no downside for the banks on this. So that's just free money that they're making. And as you point out, it wasn't enough. Like the on the night before the program was about to go into effect, they all had a freak out. And from what I understand, one regulator, the way he put it to me is like the banks had them by the short hair, so they just doubled that percentage. And yeah, and they're still going to complain about it, even though it's a pretty healthy chunk of change they're going to end up making administering these loans. But I think you're right. I mean, they do owe us after 2008, after all that. But they don't see it that way, obviously. Yeah.
Well, I'm just, this is like I can feel my inner pitchfork carrying serf coming out of the closet, and it's just infuriating because it just doesn't feel fair at all in this particular story, right? And so, what I find is that I'm a small business person. I went through the SBA web portal. I'm trying to figure this thing out. There's all these very complex things I have to try and figure out. And when I got through it all, I found out that I'm in this donut hole of person who pays pretty decent taxes, but and listen, I'm not complaining, but I got means tested out of the stimulus check, and my company doesn't really fit in because I didn't have these very narrow definitions of employees because I choose to incorporate a certain way. So it's kind of like, it's all very complex, whereas I happen to believe that this is the biggest crisis we've ever faced. This was a bubble economy that ran smack dab into one of the worst things ever, and that what we needed was simplicity. We needed speed. We needed leadership, and I feel like we got managers instead. When you need a leader who can boldly go and make decisions, we got lower level managers who Peter principled out well before their current station. How it feels.
Absolutely. And again, the analog here is to 2008, where, and I'm not saying that they should have done it this way, but there were people at the beginning of that crisis who said, all right, well, if we really want to get out of this hole, let's just pay off every subprime mortgage in existence. We could let's spend $1.3 trillion and just make the problem go away and then sort out what it all means later. And of course, they didn't do that. They spent multiples of that bailing out all the derivative contracts that were tied to those mortgages. Then they created extremely complicated programs for homeowner assistance that didn't really work. The HAMP program, which is similar to this SBA program in its conception, it was meant to target 4 million homeowners, and they bailed on it after 1.3 million people tried to make it work. So I think it's the same thing all over again. Like when it's a financial rescue, it's instantaneous and massive and simple. But when we're dealing with ordinary people, it's just layers and layers and layers of complexity, and people get exhausted trying to work their way through all the different ways to getting relief.
Well, exactly. So I noticed that, Bernie Sanders was talking about single payer and also paying off student loans. And oh my gosh, both sides of the aisle in DC were just aghast at that whole idea. And Washington, DC and Wall Street, like, oh my God, that's so anti-capitalism, as if I'll ask about what that word means in a minute. And so then I look at the student loan thing, and I'm like, okay, this is a thing. And they're talking about providing some relief there. So I go in, and it's very complex. If you have this sort of a grant, you can apply, but not these. And if the government's backing it. And then what it ultimately resulted in was they would defer your payment for 2 months on your student loans, but then you would owe it all up afterwards anyway. So that was it. It was 2 months of not paying interest and principal balance, but it all just sort of accrued to the end anyway. So not much of a bailout by my standards.
No, it's not. It's not. And I think people recognize that too, so why am I going to go through all the trouble of getting something that's not really going to help me all that much? It's going to delay the problem at best for a little while, but isn't going to fix the overall problem. And, you talk about the complaint that people have about fixing the student loan problem, it's similar to 2008 when it was suggested that we help people who are in foreclosure. Instantaneously there was this pandemonium on Wall Street, like, oh my God, the moral hazard, right? Like, if we help those people, it's just going to encourage all these bad economic decisions. And I forget who, I think it was Charlie Munger from Berkshire Hathaway who said, like, those people just have to suck it in and cope. That was the quote from him. But we were bailing out people who made bad economic decisions on Wall Street too. I mean, I think that's the double standard that people are increasingly aware of here, is that, if you're going to have that moral hazard argument, you got to have it with everybody, not just regular people.
Well, it is that two-tiered system. So moral hazard only applies to little people. Justice apparently applies differentially, depending on where you stress. So that's becoming really painfully obvious in all of this. But before we go there, let's get back to this thing. Capitalism, what is it, and do we have any of it?
It's a great question. It's funny. When I did a lot of reporting about the 2008 crisis and the years beyond, I was regularly criticized for being anti-capitalist, but what people didn't realize is that most of the complaints that I got, my sources were all people who worked on Wall Street. They were capitalists. Like, most of the people who were complaining the hardest were the things that they were angry about were the ideas that some of these bigger companies that had political connections were essentially anti-capitalist in their orientation. They were making terrible economic decisions, and instead of paying for it, they were profiting from it. And there was a cycle of this. And so it went against a lot of sort of traditional capitalist theory about how things work. I mean, allowing companies to fail is sort of the first regulatory principle of capitalism, because it fixes problems, right? I mean, it does it in a destructive way, but you have to let companies that are corrupt, that make bad decisions, that make destructive and antisocial decisions, they have to be allowed to go out of business. And that's exactly what we didn't do in 2008. We did the opposite. We took all those companies and we just threw piles of money at them, and we encouraged them to concentrate and merge together and make themselves bigger and more systemically important and more susceptible to future bailouts. So I think what we've seen in the last couple of decades is that there's a cycle of people who know that there's this implied bailout out there and they're behaving badly because of it. And the fear of going out of business, which I think is a core principle of capitalism, has disappeared.
Yeah, so let me talk about one aspect of that. Very well said. So I think this illustrates it. Citadel, most people probably haven't heard of it, but it's a really powerful, behind the scenes, mostly Wall Street company that's responsible for up to 20% of the daily trading volume, right? So it's this behemoth. And it got all caught up in something called a basis trade, which is a fancy way of saying there's a price for physical treasuries, a price for treasury futures, and they were just minting money out of this thing. Tens of millions of dollars were rolling out of this thing into their pockets. That blows up starting last fall, even before Corona crisis, and the Fed just wades on in, makes them whole. I got to rewind a little further. Ben Bernanke, former chairman of the Federal Reserve, leaves the chairmanship, joins Citadel as their chief macroeconomist. This is a company that holds trades for an average of 3 seconds, right?
Right.
What do they need a macroeconomist for? So it doesn't, like, they're not even trying anymore. The optics on that just stink to high heaven to me.
Sure.
Where's the media on this?
Well, I mean, that's a question I can get into a lot. There are a lot of problems with getting the press to cover a lot of this stuff, and some of it has to do with things that I actually understand working in the business for now almost 30 years. A lot of this stuff is difficult to do on television. You think about the things that happened in 2008, and just explaining to people what a credit default swap is or how a collateralized debt obligation works. You can't do it in a minute on television. It just doesn't work. So because of that, people have to gravitate towards simple storylines, and this is a story that kind of defies simplistic storylines. Although I think you captured one that is simple, which is that politically connected insiders have a way to affect their bottom line, their profit and loss statements, that in a way that ordinary people don't. And that people do understand. It's just the mechanics of doing those stories that are difficult. Plus, I think a lot of, obviously the financial press is geared toward people who work on Wall Street, and a lot of the people who work in the financial media, and I know a lot of them, their orientation is they're looking for a job in that industry. So there's really very little upside to being highly critical of the behavior of banks and asset managers and all those companies. Like, where's that going to get you in this business? There's not a lot of room for that kind of work. So that was one of the things that I found. I mean, I wasn't a financial reporter when I found out, when I did a couple of stories about, here's sort of roughly how this all works. All of a sudden there were people everywhere saying nobody does this. Why does nobody do this? And I think there's a lot of reasons for that.
Well, I just read on Politico this morning that this new recovery law, somebody maybe on the GOP side, they thought had slipped into the new law that allows the Fed to completely rope off the public as it's spending these billions. So no oversight, they're not required to announce meetings, and they don't have to keep any minutes as they're dispersing up to $2.5 trillion.
Wow. That's unbelievable. Yeah.
What's the chance we don't go all Nigeria on this? How much fraud and graft can we look forward to here?
Oh, well, that's a question. That's a good. So I talked just last week. I talked to Neil Barofsky, who was the bailout inspector last time, and he was laughing about this. And I would expect, just on the small business side, I would expect tens of billions of loss to fraud there, and then it'll be incalculable on the Wall Street side, because there are things that will be very, very difficult even for the most skilled kind of regulator to catch. Again, you have BlackRock administering hundreds of billions of dollars in Fed spending, and they're the world's largest asset manager. Just imagine the shenanigans that can go on there. And they're not going to put anybody who's really an aggressive regulator in charge of that. And the Fed already doesn't really answer FOIA requests, and if they're not going to keep minutes at it, I didn't know that. That's amazing. So it'll be tough. I mean, I can't even imagine what's going to go on.
Yeah, it's going to be the raccoons are in charge. They're pretty crafty little critters.
Yeah, absolutely. Yeah, and these guys know that too. I mean, they know. And this was another lesson in the last bailout. Like, the worst actors, even when they got caught, even when there were media exposés in the rare cases when people found out about certain things that happened, there were no prosecutions. Like, nobody really got hurt last time. So why would they worry about?
Angelo Mazzillo had to cough up $35 million out of his $350 million.
That's right. He had to give away a tenth of it back. That's right.
That's painful.
That's right. Sell off a couple of his houses. Yeah.
Oh my God. Skip a tanning session. It was
right.
It's just awful. But this feels different to me. I know, listen, so I get that we needed to do something, and maybe I'm one of those people who likes to point out all the bad stuff in sausage, and people say, Chris, look, come on, of course there's going to be some missteps, but we had to do something, right? In your mind, Matt, we're doing something. Is it leaving aside the 10% loss to graft and raccoons that's going to happen, are we doing the right things at all here?
I mean, I think they have some ideas in it that aren't terrible, and I hope they push them a little further. I've been very interested in the fact that both Democrats and Republicans are suddenly wise to, we should prevent them from doing stock buybacks if they're getting bailout money. Although they didn't actually make that a hardcore rule. There's a way to do it. All you have to do is basically issue a bond, get the Fed to buy it, and then use the proceeds to buy your own stock. So that's going to go on. But the fact that they're even thinking about that shows a difference in orientation from last time. Like, they're actually thinking about, well, what can we do to prevent these companies from looting themselves in the middle of this process? So, and I know that there's some momentum on the Hill to trying to make that rule have more teeth going forward, as not just a bailout rule, as something they can do permanently. And again, they did do something, even at least theoretically, to get money to ordinary people, which is different from last time. So I do like that. But there's no plan here, right? They didn't execute this financial bailout with, for instance, an idea that, we need to steer money into certain industries so that they'll develop better vaccines or preparedness programs, or so that we should reform the healthcare industry so that it actually works properly, or we should institute more capital buffers so they don't need a bailout next time, in the banking industry. That's what I don't think we're seeing. Like they're not taking this opportunity to make like structural changes that they could. I don't know what you think about that. I'm curious to hear what you think.
Oh, well, we didn't do any of those necessary structural changes in '08.
Right.
And so my view is I got to rewind a long way on this story. Let me go halfway. 1994, there's this minor hiccup in the corporate bond market by conventional, but just quaint by today's standards, right? Alan Greenspan freaks out and does away with bank reserve requirements through this fancy thing called the sweeps program, right?
Hmm.
Next thing you know, there's all banks no longer have a reserve limit, so infinity to the moon and beyond, right? And so we get this thing called the internet bubble, but a bubble doesn't happen without a story and ample credit. So that was blow up one. 2000, well, 1998 was actually our shot across the bow, but 2000 was the chime to say, wow, that was a bad idea. Nope.
Right.
You got Bernanke in, and he said, I'm doubling down on that. You got Krugman going, oh, it's just we didn't do enough. You got to print more. So we did. That blew up spectacularly in '08. And now we've trebled down or quadrupled down on that same story. And here we are. And so my view is that we were already, the only way this was going to work is if nothing ever went wrong and something went horrifically wrong, right?
Right. Right.
And yeah, and so now I don't know how my analysis is, dude, it's Humpty Dumpty, right? All the king's horses, all the king's men. You can glue this with TALF, TALP, whatever your acronyms are, but shoveling money at the top isn't going to do anything for the millions of people who can't pay their mortgages right now and are about to default on their student loans, their auto loans, and their credit cards.
Yeah, I mean that's well said. Yeah, I mean, and I think you're getting to the heart of the problem, which is if the economy is fundamentally not structured in a way that it's if it's fundamentally a bubble economy that trends towards these booms and busts that are inflated by sort of artificially available credit, then we're just going to have the same problem over and over again. You're going to have to keep doing this over and over and over again, and it's going to be higher next time, as it has been throughout each of these successive cycles, as you point out. So, yeah, that's bad.
Yeah,
Definitely.
in driver speak, it's oversteering when you're pulling a trailer. 2000, we veered towards the ditch. 2007, we swiped the guardrail.
Right now, we're just careening wildly.
Yeah, now we're on a Peruvian highway and there's a big cliff on that side.
Exactly.
And
I like that.
so the Fed will print trillions this time, and they'll have to do more and more. But the root problem, this is my chief analysis of this, the root problem never got addressed, which was we have a hollowed out economy, which enabled things and this is where the Fed, I do have a lot of criticism, and people say sometimes blame doesn't help, but the Fed was watching over this. They were the watchdogs on this, and they watched over driving interest rates below market rates, which then incentivized every CFO in the world to do what I can't fault them. If you can borrow money at 1% and retire stock yielding 3%, you'd be against your fiduciary responsibilities to your shareholders not to do that. So they did it, but everybody can't do that without hollowing out the balance sheets of corporate America, which is a bad thing to do. And somebody at the Fed ought to have recognized that. And all I ever saw them do, Matt, was pump out these PhD papers saying that wasn't a problem. And honestly, I could explain that to sixth graders and they'd go, yeah, no, that's a problem.
Well, yeah, you're absolutely right, and but we're talking. I mean, that's a fundamental uh, question about how the economy is structured, right? Like if companies are basically designed to maximize shareholder value, if that's what they're designed to do, if corporate officers are charged primarily with doing that, then that's what they're going to do. They're going to do these stock buybacks. They're going to leverage up their companies and try to return value to their shareholders by taking shares out of circulation, and that's why we have trillions of dollars, disappearing in these stock buybacks. And it's not a rational way to operate the economy, and it's not even good for the companies themselves ultimately, right? I mean, I think that's the thing that they have to, and then you add the easy liquidity from the Fed, and you've got a supercharged problem. So yeah, I agree with you. I think that's a major issue.
Yeah, so I think we were structurally ill prepared for this, but because the financialization went too far, Boeing fundamentally became a financialized company that cared less about making good planes and more about their stock buybacks, and we see the result of that, right? Now they're crying for bailouts, right? I'm not sure they should get one. Honestly, I think that in my main criticism of 2008 is I think we would have been just fine if AIG went out and Citi went out. It would have been painful, but then people would have gone, wow, that was pretty painful. Let's not invest with companies that do that kind of dumb stuff, right? And I think that would have been good. fundamentally.
Absolutely. I mean, I think looking back, we all kind of know now what the AIG bailout was also just significantly about bailing out their counterparties who also I think should have taken a much bigger hit during that crisis and didn't. I mean, a lot of those companies that were getting bailouts either through AIG or in the TARP were doing those share buybacks throughout the entire crisis. I mean, and they didn't learn anything either. So yeah, again, there has to be a little bit of pain for bad decisions, or even a lot of pain, and that they're just committing to the idea that there can't ever be any, except for people who have to make their rent and have to make their paychecks. I mean, I think they've just decided that's where the pain's going to come.
Yeah, that's why I asked about capitalism, because honestly, that was Bernie's biggest problem, as he talked about socialism for little people too, because we don't actually have capitalism, my judgment. We've got capitalism for little people, socialism for the rich. So Citadel makes money printing those $10 million bills on its basis trades. Oops, gets in a little trouble. The Fed rushes in, nanny state socialism style, to make them whole so they don't experience a loss. Well, hey, you know what? For me, I experience ups and downs, gains and losses. That's my portfolio. But the big guys and gals, they seem to have a risk-free thing, right? In which I was watching for years. Goldman Sachs, JP Morgan, they would release their annual reports, and you have to go to page 225, and they would say, oh yeah, our prop trading desk turned in 0 days of losses out of 200 trades.
Yeah, how does that work?
Statistically, tell me what we're dealing with here.
Yeah, they flipped the coin and landed on its side like 365 consecutive times. Yeah. Yeah, no, I mean, you look at AIG, they're a little unit that made all those toxic default swap contracts, AIGFP. Like, those are the guys who blew up the universe, basically, right? And they got bailed out. Like, they all got their bonuses in the end. Not only did they, was there not a consequence there, but the taxpayer had to step in and rescue those folks. And so I think what Sanders, and I covered his campaign this time and last time. That was an argument he made. I think he could have made it better though, and more forcefully. I think he was often on the defensive about his attitude towards socialism, and he sometimes made that argument that yes, we have socialism for the very rich, but he could have gone there more. I thought.
Mm-hmm. Yeah, no, I agree with that, and. So as we look into this now, into this particular crisis, I don't see any end to it. So wandering over to the science side for right now, first off, whatever the United States is doing is baffling to me. I was covering this yesterday on my program that all these hospitals are reporting that the feds, whoever that is, I assume it's HHS or somebody, is riding in and confiscating, if that's the right word, stealing is another word, their ordered equipment, their thermometers, test kits, face masks, all disappearing in transit, and they're being vacuumed up by federal officials. And yesterday, the HHS announced that they're no longer going to be funding these test places so that people get tested, like in Philly, where there's an active hotspot right now. I didn't even know they started funding them, I got to be honest, but they pulled the plug. So I'm watching all of this happen, and it's just mysterious to me, because it's hard to chalk up that many things to simple incompetence at this point. It's like, again, the coin just landed on its edge 3 times in a row in this story, and I'm getting suspicious. I don't know what's happening here. Do you have any particular insights here?
No, I mean, I haven't done a lot of work on. Yeah, I was pretty late to covering this whole thing, and I'm really only looked at the financial response. I have a lot of friends who are doctors. My wife's a doctor. Obviously, a lot of the decisions from the very beginning in this crisis were just completely baffling to people who work in that field. You had doctors who were told things like "don't test," right? Or if you're gonna test, you should test for flu and strep, which actually made it harder later on for a variety of reasons to test for COVID. And that it seemed to me was pretty clearly just about not wanting to keep the numbers high early on, right? They just didn't want to get a lot of positives, so they just didn't test people. Then there's the disparity, right? Like obviously rich and connected people and sports stars can go get tested whenever they want, and somehow it's more difficult for everybody else to get tested. Mm-hmm. But in terms of the overall response, I don't know. I wonder how much competence there really is here. There seems to be like a huge amount of confusion about what they should be doing and what's needed, and there seem to be like legitimate differences of opinion about what they should even be doing. Like the buzz of the day is that maybe ventilators don't even really help all that much, right? So because this disease acts more like a pulmonary edema than it does like a virus, and so I think people are just terrified and freaked out, but who knows what the government's up to on that level? It's horrifying to contemplate.
Yeah, well, so I'll give you my favorite sort of anecdote about this. I've been tracking this really, really closely, and I gave my first alert January 23rd.
Wow.
Well, here's my favorite moment. Uh, for the Surgeon General comes out and says, no, you shouldn't wear masks because you're too stupid to do them. I'm translating a little bit, but it's like, no, he could do more harm than good. And every country that has a face mask for everybody program is doing great managing this thing or better, right? And they have other non-pharmaceutical interventions and things in line, but this is an important component so you're not coughing the stuff out. So the American ingenuity kicks off. There's this little shop out in LA, the Sway Sew Shop, and these two women owners said, this is junk. They're sewing face masks. So they buy themselves a particulate counter. They test 24 separate materials, discover that blue shop towels that you would use, those cloth ones if you had a mechanic shop, can filter as well as an N95. They put together this whole PDF. Here's how you use it. Here's how you sew them. Here's the patterns. They get all that out on April 4th. April 6th, the Surgeon General comes out, holds up a T-shirt that I don't know what the messaging was, that says "got naloxone?" ? Right? Naloxone is the substance you use to treat an opioid overdose, and shows how to fold it up daintily into a really ridiculously useless cotton mask. Right? So somehow that Apollo 13 moment we can throw some duct tape and some vent parts on the table and figure out a better face mask. People were doing that. Our own CDC and Surgeon General were just out to lunch the whole way on that whole thing.
That's unbelievable. So they're telling you to do it with a t-shirt?
Yes.
That's amazing.
If it says got naloxone on it, I don't know,
What does that even mean?
So,
Yeah.
well, it means that this even more that's a simple thing. My point here is that because that's so simple, think about the complexity in all of these programs and how these are being administered. What are the chances that something so complex is going to be done well or right if we can't even manage the face mask challenge?
Yeah, for me, that always comes back to, if you ever seen the movie All the President's Men, yeah, when Deep Throat is talking to Woodward in the garage, and he says, the thing you got to remember is that these aren't very bright guys, and things just got out of hand. And I think that's something that people have this mythical idea of what Congress is like, what the Senate's like, what the Fed is like, what the people who work in the White House, that there's some core group of super competent individuals who are in a laboratory somewhere figuring things out. That's not the way it is. It's a bunch of people just like the people you went to high school with, who really aren't all that smart, who are often over their heads about stuff like this. Now there are bright people kind of spotted through all these places, but they tend to be outnumbered, and I think that's one of the things that comes out in crises like this, is that sometimes there just really isn't anybody at the helm.
So you're saying it's not West Wing, it's more like House of Cards, but with the guys I went to high school with?
Yeah, exactly. Yeah, yeah. Right. It is like that. It's like Heathers. No. Yeah.
Well, so what can we look forward to here in terms of all these bailouts and everything like that? And is there any, in your estimation, is there anything I'm going to call myself the little people, what can we do to help influence this whole thing? Because I don't want to see trillions wasted going to the wrong people again. I'd like to see my country get better. I'd like to see the people who need help get help. And right now, my assessment is there's a little bit of help coming to the bottom, but not nearly as much as going to the top. I want to see that pyramid inverted. What could I do, if anything?
I mean, I think this is, I'm kind of weirdly optimistic about this, oddly enough. I mean, I think this is a moment that's been so jarring to not just regular people, but to a lot of people who hold a lot of influence in this country, that they actually are susceptible to listening to the public about some of these issues. And just to take the example of the stock buybacks issue, which is suddenly a big deal on the Hill, Goldman earlier this week issued a letter to its investors saying, for the foreseeable future, stock buybacks are going to be out because they're going to be politically non-beneficial. Sanford Bernstein said that it's intriguing that it's going to be socially unacceptable to do stock buybacks. And a lot of the members of Congress are coming around to the idea of, hey, maybe we should try to reorder society so that companies actually think more about the long term, that they'll actually be better and healthier if they worry more about producing, about innovating and retaining value and plunging more money into their skilled employees, and not just constantly laying people off and trying to make the shareholders happy. I think there's a moment here where you could do that, where you could, again, it's a cliche, but call your members of Congress, write articles, go on social media. There's a lot of, and there's also associations within companies. I mean, I hear things like doctors are organizing, through these online groups, and are starting to wield their power as an organized force against hospital groups and insurers and pharmaceutical companies in a way that they haven't done before. So this is a moment where I think there can be some influence on that score with a couple of big issues. I'm hopeful. I don't know about you. I think there could be something that happens here. The problem is, of course, that there's going to be so many resources directed in the other direction that that's going to be tough to overcome.
Well, it is an opening. I agree, and I'm hopeful and optimistic about that opening because I'm fundamentally an optimistic person. This virus, 38 kilobits of information, this little tiny package came in and exposed our values, national values in the United States is wanting, right? Pretty
Right.
badly. I mean, I've been crying about the sick care system for a long time, not healthcare system, and the hospital administrators earning millions and tens of millions by the administrators of the healthcare insurance packages that are this thick and guaranteed to exclude you when you need them most and wear you down because that's their policy, rather than pay out. All of that stuff. It's just tiring, And so what I like is a lot of people are waking up and going, why are we treating ourselves that way? You know? We,
Right.
yeah.
Yeah, and we've seen sort of these gruesome things happen. Like, there are hospital groups in Massachusetts actually that are cutting the pay of the frontline workers, healthcare workers, ER doctors and the nurses. And why? Because they have to sustain the completely ridiculous incentive system that they had in place, which overvalues people who do elective surgeries and orthopedic surgeons. And those people have to make their numbers, so we got to cut the pay of the people who do the most dangerous work, who are literally risking their lives to preserve what a hospital trust fund that has billions of dollars just sitting there because they're worried about losing a couple of weeks of revenue or whatever it is. Like, people are seeing this now and they're saying just doesn't work. It's unacceptable. Why am I going to keep working in a system like this? I'm hopeful they're going to do something about it.
Yeah. Yeah, I am too. I'm a little worried that in the economist David Graeber's words, the bullshit jobs are also going to be revealed as things that were bullshit. I think a lot of jobs aren't going to come back,
That's true
unfortunately.
too. That's true. Yeah, that is especially since a lot of this economic activity was based on these sort of sandcastles of credit that we keep endlessly replicating, and a lot of it is fueled by central bank policy. And is that going to go on forever? I mean, who knows? But yeah, we're definitely finding out that it's not possible to sustain that stuff endlessly. So yeah, that's not so good either.
Yeah, seeing castles of credit. Well, yeah, I mean, in other news, I guess we're going to see a lot of the manufacturing onshore, unless we forget those lessons again real quick.
Right, right.
But
Well, that's an interesting thing. I mean, and that's another thing that's interesting that's happening in DC is that there's like this new movement, especially oddly enough on the Republican side, that is starting to view what's happening in terms of the United States offshoring all of its industrial capacity to China, as a negative. I think there are some people who are sort of hardcore neoliberal economics, who believed in that as an orthodoxy, who are changing their minds about that, which is interesting. You hear people like Marco Rubio suddenly completely switching his rhetoric on that score, which is new. I mean, we don't really have new intellectual undercurrents in politics in America, but a couple of them are developing it during this time, which is cool. I mean, I don't know whether it's going to lead anywhere positive, but it's interesting at least.
yeah, well, It's, we get something new because the old one was revealed to be swimming naked.
Right. Yeah, that's right.
Oh, that's unfortunate. So we'll not go there. So, um, so tell as we wrap this up, what was your best score playing professionally in Mongolia? And what position did you play?
So I'm not that tall. I mean, I, I played in the United States. I played in at little Bard College in New York, and so I wasn't a particularly big player, but I played small forward. But I was leading the league in rebounding in Mongolia when I had to leave. So
That's great.
yeah,
Bard. Hey,
not much of a scorer, but yeah.
I got my associates from Simon's Rock, which is affiliated
Oh yeah.
with Bard. So I think right over the
Oh,
river.
excellent.
Yeah,
Yeah.
yeah.
We're alma mater. There we go. Yeah.
Yep, absolutely. Oh, that's fantastic. So, and I know you're super prolific writer. You must be working on something now. What is it?
So I just sort of changed the structure of how I work. I used to be full time at Rolling Stone. I'm now just doing print there online. I just moved to a company called Substack where it's basically like a subscription model. So I'm doing one of my heroes growing up was I.F. Stone, who sort of independently printed a newsletter once a week and did a lot of like sort of document based journalism. And I'm basically going to do that. I'm starting um, an online thing. It's subscriber only, and doing a lot of stuff, especially right now on the bailout. So it's fun just going back to doing the investigative reporting thing a little bit more. Yeah.
Cool. Well, how do people wander over there and find that?
It's at taibbi.substack.com, or you can just look for my Twitter feed. You'll see it's at mtaibbi, and you'll see my pieces come up. Well, I'm gonna have a lot of free content until this thing dissipates. But it's a little bit of a movement among journalists who are starting to see that the bottom is falling out of the print journalism industry. And a lot of us have been thinking for some time about how we're going to proceed. And I think the economics are going to work so that we actually get paid more in the end if we just kind of cut the middleman out. We stop working for big companies and start just sort of selling our work directly. So
Yeah.
it's something I've been talking about with other reporters for a while.
Yeah. Yeah. Well, you might enjoy this tiny woe is me anecdote, but uh, so I started reporting on, my PhD is in pathology from Duke. And so I was, I started reporting on this virus early, and I was just the facts, right?
Mm-hmm.
But I was running counter to what the WHO was saying and what the CDC was saying. So get this, I get this hatchet job where a young reporter says, oh, that he's just trying to whoop up, subscriptions, and he's just trying to sell them. So he's just doing this for the money. Not a single substantive thing in the article. And you know who ran that? Mother Jones.
Oh my God. Well, I'm not surprised, actually. I have to say. Yeah, it's funny the way a lot of the sort of traditionally progressive news organizations have suddenly taken some pretty interesting or bizarre turns in the last 4 years. So
Yeah.
a lot of that's rough. I'm sorry to hear that. Yeah,
Yeah.
that's
The,
tough.
the, the magazine founded on citizen journalism goes
Yeah,
out
exactly.
and savages a citizen journalist.
Right, right. Yeah.
you
But
know,
the people who work there probably don't even know enough about, the history of Mother Jones to even know that that's funny. So,
yeah, well, let's put it in conventional terms. This is PETA running a hunting issue.
right, exactly. Yeah, right. That's a good one. Yeah.
Something like that. All right. Well, hey, thank you so much for your time today. I really appreciate it. And it's been a super enjoyable conversation. And I certainly got my pitchfork is still sharpened though. Thank you for blunting it a little bit, but it still feels pretty sharp because I don't want to see my country fail on this one. We need this too badly.
Well, we're agreed there. And thank you so much for having me on. I really appreciate it.